Welcome, everybody, and hello to the next in the Informal Leaders interview series. I'm absolutely delighted today to have with me one of the foremost leaders in ESG regulation, and that is Elisa Forletta-Fehrenberg, who is head of ESG of Zeidler. So, Elisa, welcome to our series. I'm so glad to have you.
Hi, Jenny. Thank you for having me. Very
No,
glad to be here.
it's a pleasure, and I understand that you're also going to be speaking in our June the 14th SIF event at FundForum Virtual on Monday. So that's fantastic. So I'd like to start with a question. So obviously ESG is very hot topic at the moment. And sometimes the context seems to be lost in all of the talk about the regulation. Can you give us a little bit of backdrop as to where we are now and how we got here?
Sure, yes, absolutely. So ESG has been a long time in the making. Some actually claim that sustainable investment concepts date back 200 years. But the formalization of the sustainability movement really took place in 1992 at the UN Climate Convention and was then given an expanded nature in 1997 at the Kyoto Protocol, which actually stipulated the global ceilings in CO2 emissions and for the first time formally acknowledged the effect of climate change. Following on from that, the UN Global Compact was established in 2000, and this is a voluntary initiative based on CEO commitments that are to adhere to 10 principles which are supposed to bring us to a more sustainable future. But it wasn't until 2015 at the United Nations General Assembly that actually the United Nations set out what we all know as the SDGs, the Sustainable Development Goals,
Yes,
the 17
yes.
goals that are all interconnected with each other and will transform our world. These are the ones that really started the era for climate finance. And then came the Paris Agreement, which the General Assembly agreed a formal commitment to, and the European Commission as well. And Europe has gone further. Europe has said actually that they want to transform Europe's economy into a greener, low carbon, more resource resilient, and to bring it to a circular economy and also be the first carbon neutral continent by 2050. So to do all of this, the EU really has understood the urgency to mobilize capital through the financial system. And they really want financial market participants but as well issuers and investors too, to be part of this change and to commit to the SDG, to redirect this capital. And this has spurred basically the flurry of regulatory activities from SFDR to the taxonomy, which we're talking about later. And one thing that I certainly would mention is that ESG investing really does go beyond the three-letter acronym. It addresses how a company serves all its stakeholders. Yes, absolutely. So workers, communities, customers, shareholders, the environment, and that's where all those 17 SDGs indicators come in and work in the context of ESG investing. So that wasn't brief.
Yeah, that was very, very comprehensive. Thank you. Thank you for putting that in context. So there's been a number of some really kind of interesting new regulations recently. If you can tell us firstly about the new taxonomy regulation and what is it specifically that we should be aware of?
Sure. So the EU taxonomy really is a EU-wide glossary or dictionary that specifies the criteria for determining whether an economic activity qualifies as being environmentally sustainable. This in practice means that the taxonomy sets out for financial market participants the definition of sustainable investment. And this complements and amends SFDR, which is a Sustainable Finance Disclosure Regulation. And it applies for those products under SFDR that qualify themselves as Article 8 or Article 9. it sets a higher standard. And at the moment, it is currently focused on climate objectives, but it includes, it's supposed to then be enhanced with social objective at a later stage. The taxonomy itself is enhanced by technical standards, which also amend SFDR. And what's important, I think, for our listeners and for financial market participants is that the taxonomy regulation will require them to publish disclosures by 1st of January 2022.
Wow.
Absolutely, the deadline is coming soon. So the financial market participants really will need to update the pre-contractual disclosures to either say that the product does not take the taxonomy criteria into account, or disclose the extent to which they actually do, and the companies really do invest in taxonomy compliant activities, and they need to reference then additional delegated acts to the taxonomy. These delegated acts are separate acts that the Commission is looking to issue around those topics that are not covered by the first delegated act that was issued, which was focused on climate change adaptation and climate change mitigation. The next ones coming up, hopefully by the end of this year, will be focused on agriculture, certain energy sector, manufacturing activities, and potentially nuclear. We don't know how nuclear will be treated yet. So we should be seeing some more delegated acts to support the financing of specific economic activities.
Thank you very much. That was very comprehensive. And then there's the second big new regulation that's around at the moment, of course, SFDR Level 2. Where are we now in this requirement? It's such a complicated area. It'd be great if you could clarify.
Sure, absolutely. So SFDR, as we all know, came into force. Well, the first actually important deadline of SFDR was the 10th of March of this year, where financial market participants had to disclose which products were Article 8 or Article 9, whether they took into consideration principal adverse impact at an entity level. But now SFDR is being complemented by technical standards, which are also due to apply by the 1st of January 2022. So another set of RTS to confuse everyone a little more.
Yeah.
And by then, really, the financial market participant will have to have updated their Article 8 and Article 9 disclosures with the templates that are included in the technical standards. And these technical standards are themselves amended by the RTS that we mentioned earlier around the taxonomy. So this is how SFDR and the taxonomy work together. To the extent that financial market participants have taxonomy aligned investments, then they'll need to comply with that set of RTS first. So really, in terms of next regulatory milestones, I guess
I was just about to say, yeah.
Yeah, the first deadline is 1st of January 2022, right? That is the big date. And then for those entities who have not yet published a PAI statement, so principal adverse impact statement at entity level on the 10th of March, there's an opportunity to do that by the 30th of June if they are a big entity. So that's the looming deadline on that one.
So there is a lot to do for asset managers.
Absolutely.
They've got some very serious deadlines and a lot to do. And the more you delve into it, the more I see that is required before full distribution can really take place. So, well, Elisa, thank you so much. That is really interesting, and thank you for giving us such a very concise but comprehensive analysis of where we are with the key ESG regulations. So, thank you very much.
Thank you for having me. It's been my pleasure.
It's a pleasure. Do come back.
Thank you.